Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the mortgage mom, and today we are going to be talking about trying to time the market, basically. And this is not about real estate. This is actually about trying to time when the very best day is during a transaction to actually lock in your interest rate. So we do want to talk about that because for the last 7 consecutive days through yesterday, interest rates had continued to improve. As of today, interest rates are actually going the wrong direction. They are starting to go back up again. So when did I lock in the majority of my pipeline that is currently in process? Well, I locked it yesterday. Obviously, I got permission from my clients to do that. So we discussed what their ultimate goal was for the interest rate that they wanted for their transaction, where we were when we started the file. And then I always call and say, hey, this is where we are now. This is what it looks like is going to happen. Obviously, I don't have a crystal ball, but do I have your permission to go ahead and lock in your interest rate? And I received that permission from almost every single client that we had in process. So we're going to talk about that today. We're going to talk about how do you try to time it? What are those strategies? What is it that I am doing with my clients? So that will be the show today. I do want to remind you that this is an interactive show. You are more than welcome to put your questions into the feed, ask away. I'm happy to read those out loud and answer them for you. If you would like to be part of the show, if you want to join live, I do this show almost every single week. And I say that because obviously every now and then something will come up and I won't have a show, or possibly it's a holiday and we're not going to have a show that week. But I do come on just about every single Wednesday at 1 p.m. Pacific time. So if you would like to get that notification, if you want to know when I am streaming live so that you do not miss a show, then you need to text the word live, L-I-V-E, to 844-935-3634. That's 844-WE-LEND-FOR-YOU, WELEND, and the number 4. Now, that is the same phone number as well if you'd like to call my office, if you'd like to speak with me, if you'd like to talk to Heather. Please remember that we are a small team, so if you get a voicemail that is during the week or even on the weekend, there is a very good chance that we are just on another line. Please leave your name and phone number and let us know what you need, and we will call you back. But today we are talking about the strategies around when is the very best time to lock in your interest rate if you are thinking about doing a mortgage transaction, or if you are, just starting the process. So if you are just getting that application started. So that is what we're talking about today. It doesn't look like for some reason that my text message went out to all of my listeners. So I'm going to go ahead and I'm going to run a commercial for you guys so that I can try to figure out why that didn't go out. And then I will be right back. So give me like 60 seconds and we're going to jump right in. So stay tuned. Here we go.
Oh, is it time to go for a ride? Hold, please. Let me grab a few Road Sodies to go. Our newest collection, Road Sodies, is a tribute to all of those die-hard passengers enjoying the dunes and mud while the captain does all the work. We have tees, hoodies, and hats to help you show off your style. This design just launched. Be the first to grab yours today and show up to your next adventure in style. RVRmoms.com.
All right, so welcome back to the show. I have no idea why this did not go out. You have got to love technology. Not telling me why it didn't go out. It's set up. It's ready to go. Today is Wednesday at 1 p.m. So I'm going to try to get this to go out at 1:15. But in the meantime, I'm going to go ahead and talk. There's really nobody on because the text message didn't go out accurately. So I am going to talk about the strategies and explain to you how I work with my clients to make sure that we are trying to get them locked in at the very best possible timing. Now, one thing to remember is that with interest rates, nobody has a crystal ball. Absolutely nobody can determine what is going to happen in a week from now, what is going to happen in an hour from now, what is going to happen in a day from now. It truly all comes down to understanding of the market, history with the market, having education around what are some of the things that move the market, what are the reports that are going to be coming out that are due. So, for example, we had an inflation report today. We had some other reports as well. So in anticipation of what we believe that we are going to hear, we can try to make the right decisions. However, just like today, they were anticipating that inflation was actually going to come in lower than expected, and it came in hot off the presses. And with that, it really jumbled the market and started to throw things in the opposite direction of where we have been headed over the last 7 days. So if I would have just been working off of nothing more than what we expect to happen today, I would have possibly told my clients yesterday, we're not ready to lock in yet. We're going to continue to try to ride out this wave. However, there were some other indicating factors that I was concerned with. So one of them being, some things that were happening in Germany that very well could have sparked the bond market. And sure enough, it came out today and it did. Now, there were some other indicating factors that I was also just had that gut feeling where we had 7 straight days of green candles. So if you follow the stock market, there are many different ways that you can watch and see what has been taking place. If you follow Bitcoin, you will see that all of these different podcasters and people doing YouTube videos are showing you these charts. And in these charts, you'll see red and green candles. So we were actually hitting the numbers that have been our resistance. And if we can break through that resistance, it sends us, packing. It sends us on our way down to the next resistance level. So we were pushing up against these resistance levels and we had broken through them a couple of times, but we didn't break through very far and then popped back away from them again, into higher territory. And so seeing that we were struggling to get past that resistance level, we had 7 straight days of improving prices. I truly didn't feel like, I felt like we were really gambling. I mean, we were sitting at the table in Vegas. We had thrown the dice 7 straight times. We had won. Do you take your winnings and run, or do you just keep going and possibly lose it all? So I really felt like we were pushing against resistance levels. There was a report that was coming out today. Yes, we were anticipating it to be a good report, but it was still something that could move the market, and it could move it very quickly and very negatively if it didn't come out the way that we were anticipating. I knew that we had some news coming out of Germany where, they're having some economic issues and they were going to have to sell off, some things to try to keep things in order for their government. And all of those things could have been a big change, a big factor in what took place today in our rate sheets. And it turned out that it was. So we have lost quite a bit in our bond market today. There's been quite a bit of sell-off. It just isn't good news for bonds when there's other particular things that move the markets. And so we actually have seen quite a big swing today, and it was a pretty drastic swing. Now, I've talked about this in previous shows as well, which is something that's really important for you guys to understand. Interest rates, whether we're in an increasing interest rate environment, which we've been in for the last 3 years, or whether we're in a decreasing interest rate environment, which we are now just turning that corner and starting to get into. Well, I wouldn't say now. I would say that we actually started the decreasing trend last year. I would say in 2024 that decreasing trend started. 2023 were by far the highest interest rates that we have had. and October of 2024 were the very best interest rates that we've had in about 3 years, maybe even 4 years, but in about 3 years. October 2024, we were almost hitting those levels again. Like we are 0.25% off of hitting those October 2024 levels where we were getting our clients into, depending on the loan program, low fives to high five interest rates. So right now we're actually still doing really great. We're in the high fives for our government loans, our VAs, our FHAs, and we're in the mid sixes to high sixes for conventional loans, depending on the size of your loan, how much money you have in down payment, things of that nature. The property type, so condominiums are more expensive than single family homes. So there's a lot that goes into an interest rate with a conventional loan, but we're still at a very good place right now, and we are on a decline. We are in the declining interest rate environment. So exactly what takes place with that? We are going to have a run where we'll have a run of 3 or 4 days where things will start to come down. Then we're going to have a run where they're going to pop back up, but they probably won't go quite as high as where they were before. And then all of a sudden they will start to come back down again. And they should go down a little bit further than where they left off the time before. Now, October of 2024 was kind of a freak in the fact that we got down so low and now we have struggled so hard to tip that same exact point again. Will we hit it? We will eventually hit it. Again, we are on the de-escalating rate environment, right? We're standing on the down escalator. So we will hit it again, and eventually we will break through that barrier and we will go down even further. But right now we need to be able to lock in and take advantage during the runs that we have. So the first thing that you do when you start a loan application with your loan officer is you talk about locking in your, where is the interest rate today? What is the monthly payment that I am comfortable with? What has been going on in the interest rate world? So, have we seen 3 or 4 days of improving prices? Have we seen 3 or 4 or a week worth of worsening prices? What are the future reports that are due to come out? Is there a Fed meeting? Is the Federal Reserve due to meet and make a decision on holding rates steady, possibly, giving us a rate cut? Are there inflation reports that are due out? Are there unemployment reports that are due out? What is happening this week that could shake the market? What happened last week? Have we been going down? Have we been going up? Where are we at? So number one, it is very important to have this conversation with your loan officer. And if your loan officer doesn't know how to answer these questions, they probably haven't been in the business for very long, or maybe they haven't taken the time to truly educate themselves. This is a very, very important piece of the puzzle when choosing and selecting who you are going to work with for your lending transaction. So that's really important. If we are on a downward run or we are holding steady, we are plateaued, interest rates haven't moved for a couple of days, I would take your application and I would not lock in the interest rate. I would let it float for at least day by day. Again, you remember when I started the show, I said, we cannot guarantee you what is going to happen with interest rates. We cannot guarantee you, or we can't predict, tomorrow it's going to be better. All that we can do is assume with educated assumptions, educated guesses. What happened yesterday? What is due to come out tomorrow? What report are we waiting to see? What are we hearing or that we feel that, should be that report that we're expecting to hear? So these are the best conversations that we can have. But at that point, we take that application, we talk about where the interest rate is today. What is that monthly payment? Where would you like to see that interest rate? Do I feel, when I'm having a conversation with my clients, do I feel that the interest rate that you would like to see is something that is even fathomable, right? Or, is it even possible for that interest rate to happen? If that is not even within the realm of possibility in the transaction that we're looking at, I'm going to be very honest with you and say, I don't think that we're getting there. Do you still want to move forward? If we've got an interest rate that is very close, within a target range that could very well happen, we're going to talk about, this is where it is today. This is where it would be if you lock in where you want it to be. We are going to become very fast friends. We are going to be texting with each other on a daily basis for an update on what is happening in the market. Is this the time to lock? Should we be locking today? If things change very, very quickly, which can happen, and it happens quite frequently, we can see things come out changing within an hour. So this morning when the market opened, we opened up flat from yesterday. And then all of a sudden the report came out, and within an hour, we had lost about 0.25% in interest. So that's a huge, huge swing within an hour. So as we're seeing these things shaping, I am reaching out to my clients who have not locked in an interest rate, and I'm saying, it looks like we're going to get worsening prices. Now, this is in your court. This is up to you. Here is where the interest rate is. I can hit the button right now and I can get you locked in. Or we can continue to float and we can gamble and we can hope that today's a bad day and that tomorrow it very quickly reverses itself and continues down the path to that interest rate that you were hoping for. So we're going to have those conversations and we are going to be in touch to try to make the very best decisions that we can. Now, one of the other things that is very, very important is that you do understand, and we're going to talk about this, you understand what the interest rate is when you take the application, and that when you are floating your rate, you are floating with the market. So you are subject to the market. It is just like if you are in Vegas and you are gambling. If you are standing at that table and you are throwing the dice at craps and you decide to let it ride, you absolutely could lose everything that you won on the spin before. So we have to keep in mind that when you choose to float because you are hoping for better, you are riding the market, just like your stocks. And, if you leave that stock with that, your investment in that particular stock and that stock tanks, you're going to lose money. So it is the same thing with an interest rate. Ultimately, not my decision. Ultimately, yours. You are the borrower. It is your application. It is your transaction. So you are choosing whether you want to lock in that interest rate or not. Now, a very important conversation at the beginning of a refinance transaction is this is where the interest rate is today. This is what the monthly payment will be. If you are comfortable at this payment and you are not a gambler and you are concerned with what could happen down the road, we may very well just choose to lock you in because you are happy with that. If that is not the payment that you want, you're not comfortable with it, and it doesn't make sense to move forward and to start the application unless we hit a certain number, then we are going to start that application and we are going to float. So now, why was it so important to have just said that? Because that makes sense, right? I cannot lock in an interest rate unless I have an application in my system. So you can't have a conversation with me and say, when it gets to 6.5%, Deb, go ahead and lock me in. I can't lock you in unless you actually do a loan application for me. So we have that conversation about do your loan application. Send me your loan documents. I need X, right? I need W-2s. I need pay stubs. I need a current mortgage statement. I need your homeowner's insurance policy. I need your HOA statement if you have an HOA. I need your bank statements. Whatever it is that I need for your loan application, I need to get your application in my system. It needs to be an active application in our system moving forward in order for me to hit a button to lock a rate. So you can't just call me because you hear rates are going up and say, lock it in, let's go, I'll do my application today. It doesn't work that way. You absolutely have to have that application in my system. So what are we going to do? We're going to do the loan application. We're going to collect your documentation. I'm going to send you out disclosures at the interest rate that you told me that you want, and you don't want to move forward without that interest rate. I'm going to send you those disclosures. We're going to get your file all ready to go. And then we're going to sit and we're going to float and we're going to wait. And when that interest rate hits that number, that percentage that you want, I'm going to make a phone call and I'm going to say, we hit it. Do you want to lock or do you want to continue to float? And then that's going to be the next conversation. We're going to talk about what's going on, what's happening tomorrow, what reports are coming out, what could affect you losing this interest rate that you have been waiting for. So very, very important for you to think about if you've been planning to do a refinance, that you want to jump on top of it. You don't want to sit around and wait to fill out the application until you get what you want. If we are within 0.25% to even maybe 0.375% interest rate of where you feel comfortable that would make you feel like this is the time to pull the trigger, we want to get that application started right away, or you very well may miss the ride. So what do I mean by that? 7 straight days, interest rates got better. I have a client that really wanted to get to a rate of 6.5%. We started the application at 6.875 on Thursday last week. Today is Wednesday, so 6 days ago, 6.875. She really wanted an interest rate of 6.5. I did tell her we got everything started. I said, I love 6.5, but obviously we're going to be in touch and I'm going to let you know how things are going. I have her application. I have all of her documentation. I could see that there was a good chance that we might lose everything that we gained over these last few days if we waited to lock it in until today. I did call her yesterday and I said, I can lock you in at 6.625. It would make the difference of $54 per month. Would you like to lock it in from the 6.5 that you wanted, or would you like to continue to float and try to ride this out longer? She said, I want to float. I want to ride it out longer. I don't want to lock it in. And I said, okay. So I did my job in telling her I felt there was a chance that everything that we had gained, that 0.25% interest rate that we gained within 6 days, that we were at a possibility of losing that improvement if we waited. So she got the information from me. She said, no, I do not want to lock in this interest rate today. I really want that 6.5. And I said, okay, because my job as your loan officer is to do what you ask me to do. Obviously, it's also my job to advise, to help, to get things structured, to tell you exactly what, is the best way to move forward, to get everything put together. But at the end of the day, it is your loan and you are the borrower and you call the shots. So for her, she waited. We did not lock her in. And we're going to probably continue to wait. And it could be another week. It could be another 2 weeks that we lose ground. It could be 3 months. It could be 4 months before we come back to where we were. There's no way for me to know, but think of it this way. October 2024, best interest rates we had. Yesterday, we were almost where we were in October of 2024. So how long did that take us? It was beginning of October that we had those rates. So it took us November, December, January, February. It took us 4 months to almost hit the numbers where we were the time before. So could it be another 4 months before this girl gets to 6.5? Sure. It could be another 6 months. Could it be 2 weeks? Absolutely. It could be a week. It could be tomorrow. But we are so close in where she wants to be that we've got her ready. We've got her in the system. I have everything that I need, and I can hit the button at any given time. So that is the best strategy for you, is if you are planning to get something done, especially a refinance, do not wait until you hear that rates are low, because they do move up and down all the time on a daily basis. Yesterday, we had 2 different rate sheets. Today, I guarantee you we'll have at least 2, possibly 3, because when the market swings quite a bit, we get worsening prices. We get brand new rate sheets throughout each day. So make sure that you're prepared. Make sure that you're talking to your loan officer, and make sure that you have everything ready to go to be able to execute, lock in, and get the very best deal that you can. So with that, I'm going to go ahead and close it up. I never did get my text message to go out. I do not know why it did not go out. So I've obviously got to do a little bit of tech support with my texting system. But if you would like to get a text message when I do go live in the future, when it's working right, make sure that you text the word live, LIVE, to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. That is also the telephone number to reach me if you'd like to give me a call at my office, ask me questions, get a mortgage started. If you like email, please feel free to go to the website, go to mortgagemomradio.com. Everything you could possibly need is on the website. If it is easier for you to opt into the weekly text messages to get that link to join, you can go ahead and do that right on my website as well. So again, it is mortgagemomradio.com. I hope that you guys have a fabulous rest of your day, and I will be back here again next week at 1 p.m. Pacific time on YouTube. I'll talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's a mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.